So you're thinking about jumping into the stock market, right? It's so easy to get totally lost in all the noise and the hype out there. But what if I told you there's a way to get started the right way with a simple, really powerful plan? Well, that's exactly what we're going to do. We're cutting through all that confusion, and I promise by the end of this, you'll have the clarity you've been looking for.
All right, let's just dive right in. When people get into the stock market, they almost always fall into one of two camps, even if they don't know it yet. On one side, you've got the gambler. This person is all about hot tips, the thrill of the chase, quick profits, and honestly, a ton of stress. But then on the other side, you have the investor. This person is all about clarity, patience, and building real long-term wealth. And trust me, the path you choose from the very beginning, it makes all the difference. You know, most people, and it's totally understandable, they start their journey with that gambler's excitement. They're hoping for those quick wins. But here's the thing. If your goal is genuine, lasting wealth, you've got to switch your perspective completely.
So what is that perspective? It's actually super simple, but it changes everything. You need to start thinking like a business owner. Seriously. When you buy a stock, you're not just buying some ticker symbol that wiggles up and down on a screen. No way. You are buying a small piece, an ownership stake, in a real, living, breathing company. That is the fundamental mindset shift right there.
Okay, let's just pause for a second and be real about this. Ask yourself a simple question. Does any actual business grow overnight? I mean, do their profits climb in a perfect straight line every single month? Of course not. We all know that's not how it works. Real growth takes time. It's a process of building, innovating, and expanding year after year. And this really shows the kind of time frame we need to get our heads around. See, real investing isn't about what's going to happen in the next 5 days or 5 weeks. It's about the next 5 years, 10 years, 15, even 20 years. That's the kind of time it takes for a good business to do its thing and for its success to show up in your investment.
And this brings us to such a critical point. Look, if you're glued to the screen watching the daily price changes, you're basically just signing up for a roller coaster of stress. It's that simple. But if you adopt that long-term, business owner mindset, you're setting yourself up to create actual, lasting wealth. Your mindset literally determines your outcome. Okay, so now let's talk about how this long-term approach actually builds that wealth. Because it's powered by what might be the single most incredible, powerful force in all of finance. We're talking about compounding.
So, what exactly is compounding? Well, in the simplest terms, it's your money making more money. It's where you start earning returns not just on your original investment, but on the returns you've already earned. Think of it like a snowball rolling down a hill. It starts small, but it just keeps picking up more snow and gets bigger and bigger, faster and faster.
All right, let's see this secret engine in action with a quick example. Imagine you start with an investment of, say, 1 lakh rupees, a really solid starting point for anyone.
Now, let's say that money grows at an average of 12% per year. After the first 10 years, that 1 lakh turns into about 3,10,000 rupees. I mean, that's pretty great, right? Your money has more than tripled, and you didn't have to do anything. But believe me, the real magic is just getting started. So what happens if you just let that same investment ride for another 10 years? Just 10 more years. Well, look at this. It grows to nearly 10 lakh rupees. Get this, the growth in the second decade was more than double the growth in the first. That right there is the power of compounding really hitting its stride. Time is the fuel for this engine. Okay, but let's be honest. The journey isn't a perfect straight line up, is it? The market goes up, it goes down. And that's what we call volatility. Now, for a lot of people, that word sounds like danger. But for a true investor, it means something completely different. Just think about the difference here for a second. With something like a fixed deposit, it's super predictable. You know exactly what you're going to get. The stock market, it's variable. Some years are going to be great and some not so much. But you have to understand that this variability, this unpredictability, is the price you pay for the potential of getting much, much higher returns over the long haul. So how should you react when things get volatile? This quote just says it all perfectly. You've got to think like a buyer at a discount sale. I mean, when prices fall at your favorite store, do you run away in fear? No, you'd probably buy more, right? It's the exact same logic. When the market falls, it's not a crisis, it's a sale. And there's a really brilliant and simple way to put this idea into practice automatically. It's called a systematic investment plan, or an SIP. It's so simple. You just invest a fixed amount every single month. So when the market is down, that fixed amount of money automatically buys you more units. And when the market is up, it buys you fewer units. And what's the result? Over time, you end up lowering your average cost. It's this beautiful, disciplined, and unemotional way to actually take advantage of those market dips without even thinking about it. Okay, so this all sounds great in theory, right? But the big question is, where do you actually start? What's the most practical, smartest first step for a beginner who wants to get on this journey? Well, for most people just starting out, the answer is usually mutual funds, and here's why. First, you get instant diversification. I'm talking about being invested in dozens of companies right from day one. Second, you have professionals, actual fund managers, doing all the heavy lifting, all the research and monitoring for you. This dramatically lowers your risk because you're not betting everything on just one or two companies. And finally, they're just perfectly designed for starting an SIP. It's a fantastic starting point. And listen, this is so important. Please don't feel like you need some huge pile of cash to get started. You absolutely don't. The real power here isn't in how much you start with. It's in the discipline of just starting and then staying consistent. Honestly, the single most important thing you can do is just to begin. Finally, let's just set some realistic expectations here. This is not about getting rich quick or doubling your money every year. That's not how it works. But if you look at the historical data, good quality stock market investments have delivered average returns somewhere in that 12 to 15% range over long periods of time. Now, when you compare that to other options, you really start to see why it's such a powerful tool for building real wealth. And that's really the ultimate goal, isn't it? When you adopt this long-term owner's mindset, when you let compounding do its heavy lifting, and you manage risk intelligently, investing stops being a source of stress. Wealth creation becomes what it always should have been, a natural, simple, and even peaceful process. So the only question left is, are you ready to start that journey?